I'm going to highlight 5 spectacular dividend stocks to buy for 2023. So let's get right into it. The first one I'm going to highlight is Home Depot, selling at a forward price to earnings ratio of 18.94, which is not relatively expensive, and offering investors a dividend yield of 2.41%. And if you've been following my channel, one of the things I often say is that very few companies did an excellent job of managing their business during the pandemic, and Home Depot was one of them. They did a tremendous job fulfilling orders, keeping their shelves stocked, managing costs, and coming out of the pandemic stronger than they were before without experiencing any after effects of the times during the pandemic. So kudos to Home Depot management. That's one of the reasons why I think Home Depot is a spectacular dividend stock to buy in 2023. The next stock I'm going to mention is McDonald's, trading at a forward PE ratio of 26.48, offering investors a dividend yield of 2.15%. Similar to Home Depot, I think McDonald's did a really good job during the pandemic, although not as good as Home Depot, but they did a really good job emphasizing their digital channels, creating partnerships with food delivery providers, expanding the reach of its restaurants, and increasing its sales and profitability. Earnings per share skyrocketed in its most recent year, and now they've gotten customers accustomed to ordering from their app, which is going to be a good thing for McDonald's cost structure. They're not going to need as many cashiers, as many drive-through operators now that they have that digital channel. That's going to be good news for McDonald's going forward. That's why I think it's a spectacular stock for 2023. The next stock I'm going to mention is AT&T, the wireless and broadband internet providers, trading at a relatively cheap price to earnings ratio of just 7, offering investors a dividend yield of 4.52%. Of course, the customer growth, the saturation for broadband and wireless is already at maturity. It's not going to add very many new customers, but at the same time, it's not going to lose very many customers, even in the event of a recession, right? One of the last things customers are going to cancel is their internet connection. That's a vital service that they're going to need, and so it's not going to get cut. So revenue might not grow very quickly, but it's also not going to decline very quickly, and that's especially important as the risks of a recession are increasing. AT&T's revenues are relatively protected, and given its very cheap valuation and very high dividend yield of 4.5%, investors can expect a reasonable yield from this company. That's why I say it's one of a spectacular dividend stocks to buy in 2023. The fourth spectacular dividend stock I'm going to mention is Domino's. Domino's is trading at a forward PE ratio of 28.51, offering investors a 1.27% dividend yield, which is not very high. But investors can expect this dividend yield. If they were to buy the stock today, they can reasonably expect this dividend yield to grow over the next 5 and 10 years. Domino's is still growing very nicely on the top and bottom line, and the company is especially well protected during a recession. It offers in the US a family of 4 can eat with Domino's for less than $20. That's going to be important as families' budgets get tightened. Inflation is causing increasing price of everything. Families are going to look to save money, and Domino's could be one of the places they go to in favor of eating somewhere else that might be more expensive. And the final stock I'm going to recommend to buy for 2023 is Walmart, trading at a forward PE ratio of 23.36, offering a dividend yield of 1.58%. Walmart has done an excellent job rolling out its e-commerce business, rolling out its same-day services. Customers can now buy online, pick up in store at Walmart, and customers can order from Walmart and get it delivered to their homes, especially more convenient with the Walmart Plus subscription. So they've done a really good job pivoting the business, matching consumer needs, and they have decades of excellent merchandising prowess. They are the low-cost provider in the industry. Arguably, nobody does it as well as Walmart, offering low-cost goods to customers, and that's going to become increasingly more important. As I mentioned earlier, inflation is really pinching consumer budgets. They're going to look to get more bang for their buck, and Walmart stands to benefit. So there you have it. 5 spectacular dividend stocks to buy for 2023. Thank you for tuning in. I'll see you next time. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.